respect to one of the critical component of whole of the secured lending process. I'm not looking at whether it's a home loan or that you're talking about the loan against properties. Both if you look at it, the complexity remain there. And for the complexity, one of the critical, as I'm talking about, that your entire the technical assessment, which is primarily to assess the value of the property against which that loan has to be given. And the second part is the legal, where that your entire the title and chain of records that need to be assessed and plugging in the whole of the process into your underwriting process. So I've been joined by esteemed panelist who comes with a wide experience into that lending and primarily to drive that is secured lending. So with respect to that, as all the panelists are there, we'll start with the introduction. And guys, we'll take a pause in between. And if you have any questions to any specific speaker, you can put the question in the Q&A section, or we'll open a mic and invite audience, somebody from the audience to ask the questions. So with respect to, I'll just continue the introductions. I've been joined by Mr. Rajul, Bhargava, ED and CEO of DMI Housing Finance. Thank you, sir, for joining us.
Hi everyone. Thank you for inviting me.
Yeah, and then also I've been joined by Venkata, Anil, Reddy, Vice President IT Solution Delivery from Ujjivan, a small finance bank. So we trying to get that IT perspective, which is again the very critical part to the whole of the process. I think Anil, you are there, right? Thank you. And then we have been joined by Puneet Nagpal, who is
Hi to everyone.
Yeah, Puneet, thank you for joining us. He is MSME Credit and Monitoring. He's heading the business, and then he's from CSB. And then last not the least, we've been joined by Padmanabhan Ramakrishnan, head of the Business Solution Group, Unity Small Finance Bank. Again, he's coming from the wide experience of the lending. So can you see all the panelists there? I think they are there. And if you can switch on the video, then we can get started with the discussions. And guys, as I already put on the structure, we'll go through the discussions on the topic, which is primarily for the today's discussion is technical to the legal, which is again a core component of the whole of the secured lending with respect to the property valuations. What are the challenges and opportunity for innovations? So Rajul, I'll start with you. You are driving that entire the home loan business, and maybe you can just give us a perspective towards the whole of the aspect with respect to technical and the legal valuation, that what do you feel that what are the critical element to the whole of the process for the secured lending, especially the HLL lab, and what are your views on the current practices adopted by the bank or NBFC or HFCs? Just as your overall view at the current state that we are into that.
For for home loan and loan against property, MSME loans, the property plays an important role in security. So when the credit fails and you are unable to recover the money through your normal repayment, property plays an important role in recovery. So when you are talking about property, the appraisal should be based on the fair valuation that the property you are lending, it should be valued fairly, and then there has to be no disputes. That means the title of the property should be clear. So as of now, all the banks are using vendors or their in-house technical people to value the property. And for technical purposes, to check the title of the property, people take help of legal vendors. So now there are different methodologies. Earlier, when the things were started, it was all manual. Now people have started taking legal report automatically. The legal vendor upload the report on system. Then some of the organization what they have done is they have built rules around the legal report. So now typically the title has to be clear, marketable. The area should be there.
This meeting is being recorded.
Legal and technical, the area should be there, four boundaries should be there. So, to confirm a title, multiple things are checked. So legal vendors are asked to put multiple details.
Paddy, if you may switch on, yeah. Sorry, Rajul, continue. Yeah.
Based on the rule, some of the organizations have started taking, automated approval for legal reports. Similarly, for technical valuations, since now you have bots available, you have systems available, then, the guy who is visiting the property can, fill the reports from there, capture the geolocation, capture the photograph, and from there only he can, submit the reports. Now, every organization has a different set of rules where, technical valuation is done. Say, for example, some organizations will say that, okay, the property should not be situated within 30 meters of railway line. It should not be on the highway, or there has to be some distance between. So you need to build those rules. And based on the rules, the cases can be approved on system. I mean, system can take that decision, or if there is an exception, that can be, escalated to the senior authority. So these are the, basic things that people are following for legal and technical. Once your legal technical is done, then, by and large, 95% things has been done.
So, Rajul, continuing from the same questions, so we know that there are multiple variants of the properties, right? Be it on the flat or independent plot, independent buildings is there, independent houses are there, and then kacha and pakka kind of the structure, whole of the things, and then also the structure differ from the state to state. What are the typical challenges that you see being actually the lenders face when trying to evaluate? And I'm talking about the large part, especially more on the lab side of it, with respect to MSME. What are the typical challenges that you see? And then and this question is open. Any of the speakers may like to add.
So in terms of valuation, so different states have a different kind of properties. Say in some states, like in Rajasthan, especially in Jodhpur, a patti structure, where the, a stone is used for construction, and that is based on their local understanding. So every state may have a different kind of structure, but by and large, all across India, RCC structure is not being followed. And if you talk about ticket sizes, any loan about 10 lakhs, you get a pakka structure. Yes. If the loan amount is less than 10 lakhs, you may get a, a structure which is not that pakka or RCC structure. So based on the, organizational risk appetite and the target segment, they decide on, what kind of property they need to do. When it comes to, typically there are three types of property. One is the land. So whenever, people are valuing a land, the property should be identifiable, must have an approach road, should have a basic amenities. So these are the things that needs to be checked, and it should be done, digitally. When the guy who is using the bot or using the valuation platform should be able to do it, and taking the photograph of surrounding, and then should be able to, check whether this property can be done or not. One is that one is the plot. Then after the plot, there is a under construction properties where customer is either constructing the house, or the builder is constructing that house, and then it is in the process of construction. This is the second type of property. So based on the progress of construction, people give money. And third is the ready move house, which is either direct from the builder, or it could be resale purchase property. So these are the broadly three types of property. And this is used for home loan. When it is a home loan, typically it is known as purchase, or a construction, extension, improvement loans, or a plot purchase loan. When it is a LAP, then typically it is done on completed properties.
Maybe when it comes to LAP, you also look at certain kind of property types, such as whether it's commercial, industrial, residential, etc.
Paddy, I think voice is breaking at your end. I think he was talking. Paddy, yeah, maybe you can just try again.
Yeah, I'm saying when it comes to LAP, you also have an overlay on the nature of the property, whether it's commercial.
Paddy, I think voice is breaking. Maybe you need to find out a network. Maybe some challenge. We are able to, but it's not clearly audible.
Okay.
Yeah, maybe Puneet, if you like to add any point while we come back to Paddy. So you are on a mic, mute. You are mute. Puneet sir, you are on mute if you are talking.
I'm audible now?
Yes, sir. Perfect.
So basically, Shashank, if we talk about, say, LAP and housing, basically I'm more of a LAP and MSMEs and corporate guy.
Yeah.
right? And my labs are majorly for SMEs where the cash flows are from the industry itself. And of course, the individual labs which are at a higher level, above 10 crores or something, which is a segments which you normally look for as a banker. So basically, the challenges, if in terms of we talk about the properties, of course, every geography has their own nuances, right? So some of the areas we say when we talk about the properties, there's a regulations also, some of the state governments regulations, and something which also restricts and which everyone have to very take care of while funding and property valuations are being done. There are challenges which are actually which comes normally, whether it's related to right valuations which have been done, or whether the saleability aspects have been properly judged about. Once the stress sale happens, some the first thing actually which as a banker which comes to a people, are we taking a right call on the property? And before property, of course, there is something like a cash flows and salaries and whatever part which see for. But from a property perspective, you're talking about, yes, those are the things. Slowly, those are getting resolved because more and more processes are being put up around, right? Whether it's in the form of a digital or automated processes and whatever we say. And since now we are becoming intelligent in terms of more and more data being with us, that is really helping to create a strong database too, and taking out a queue out of that. These are the particular type of properties, particular type of areas where we need to fund, and this is how our approach and the policies are being drafted accordingly to around that. That is how we are going ahead.
Thank you, Puneet. So now, attending this whole discussion, Paddy, I'm not sure your network is better now. So, but Paddy,
Can you hear me now?
no, Paddy, unfortunately not.
Well, I can hear of you loud and clear, so I'm not able to understand why.
Yeah, but when you're
Is it better
talking,
now?
that maybe if you're using headphone, and maybe headphone may have an issue.
Okay, let me rejoin the call.
Maybe you rejoin and then we'll come back to you. So sorry, guys. So sorry for the interruption. So again, I'll continue the discussion. When it comes to the property and the technical valuation or the legal, lots of the documents also being asked from the customers, right? Typically, we used to talk about property agreement and sanction plan for that property, commencement certificate or occupancy certification, and all these things. How do you see that these are the typically challenges for the customer to provide this document in one shot? Because that's where that also I see that to and fro, the sales guys as well as the technical team in the back end or the credit team goes on that where the multiple set of the documentation been asked when it's sent to the legal also, or when sent to the technical. Typically, like multiple round goes into the collection of all the documents itself, and I'm sure that you may be facing. So how do that typically these things get solved? Because that will also improve lots of the time that if the all the documents have been collected in one go, and the customer also able to provide these documents.
So Shashank, if I talk from the customer perspective, so what is important from a customer is, one is a time. Time is an essence, right?
Yes.
And leave aside the competition banks have in the market that this bank is doing it 2 days or this bank is doing it 5 days. From a customer perspective, it's a time and the other is a cost, right? And of course, the third part which comes is a trust about whether I am giving up papers and it is going into a right this thing, and information which I am sharing with you, because information itself is a very critical part. But for a customer, the critical part is basically cost and the time. And say we, or as you, as Samir was talking initially about the housing loan experience, it takes too much of a time, and in fact the different banks. And when we talk about that, so why it takes too much of a time is, first is people are living in the silos. The different departments are working in silos where actually a right assembly has to be put in place. Right, we are now using LOSs, we are using LMS, right, all digital paths. But understanding one part as a banker or as a financial institution, that the digital will not only, it's only helping you. It is not everything getting out of a digital path, right? where as a right processes has to be placed, that and the rights, roles and responsibilities have to be put in place, that this is to be done as a bank or as an institution, not as an individual. You are connecting with the client as a bank. In a single shot, things has to be taken from a client, and then all the journeys should be done fast. Then actually, so one is your digital landing path, which is a interface with the customer, immediate picking up information and giving him the in principles type of things, giving the confidence to a customer, yes, we are there and we will be able to do it. Then secondly, it's more about, once you have collected information, it has to be done in a right, there has to be right checklist, and the team on the ground should be properly literate about the thing. These are the 5 things which you should be picking up. The first responsibility, which starts from a sales perspective, it should not remain as a sale, it should be more of a relationship that has to be instilled in the team. And once it is being given to the other, baton has been passed to a whether credit or this thing, whole responsibility has to be completed in a particular internal SLAs which have been agreed upon, right? So for a customer, it always be a single interface, but the education levels for a RM and on the stage, that is also very critical, that we observed as thing, which makes a huge change in the overall relationship perspective. And of course, the cost also comes with slower the say shorter the process, lesser is the cost also.
No, I think we very aptly put, Puneet, because we were working with one of the customer. In fact, within the organization also, that different states, the branches, the different, they start following the different practices. Some deviations may not be the complete deviation, but at least we will start seeing that the deviations in the whole of the process being followed. So yes, so I assume, Paddy, you're back, and we should be able to hear you.
Is it okay now?
Yeah, now
Perfect. Perfect. Thank you, Paddy. So, Paddy, I think you've been listening to us. Maybe your initial thought, and then I'll come to you. The next question, which is maybe you can share some of the initial thoughts which we have been primarily discussing. And I want to extend the questions from that pure technical to legal, only that process part of it. But I want to extend it to the whole of the collateral management. That how the typically technology can play the role, or currently playing the role, from the identification of property at the start itself until the time of the entire the signing of the documents, collection of the documentation in the whole of the secure lending process. So what do you, Paddy?
Yeah, I think there are a couple of pieces here that one should look at. One is that historically, MSME loans have had a much higher TAT, largely because since there is a physical touch in terms of property, you tend to sort of drag on every other process. But life has changed. And I think all the panelists prior have also touched upon it. You have much higher visibility to data. You have much richer data sets. The one thing that has still not changed is the way in which property is evaluated. You're still doing it physically. Now, let's draw an example from the personal loan piece. What do you do in the personal loan piece? You try and eliminate a whole host of applications upfront so that your funnel becomes sharper. And on that very sharp funnel, you run your BREs, you run your rule engines, and you run your offers, right? Now, what is legal and technical for a property finally? It's about ensuring that from a ownership perspective, you have control. And from a valuation perspective, you're adhering to the bylaws that the property is something that you can take recourse to in the event of a default. I think that's really what it boils down to at a fundamental level. How can you build some of this upfront? In my view, you can actually use the application module to actually take videos of the customer's place. Just to give you one use case. Through that, you can actually get a sense. I mean, look, if you look at the way the property market in India is also evolving, particularly for the salaried segment, particularly for the sole proprietor segment, you're increasingly going to more and more of high-rise standardized properties, especially in your top cities, which probably accounts for 60-70% of your total portfolio. There, there is not so much of technical valuation problems that you're going to really face. I mean, what are you going to question in a Hiranandan or a Raheja on the technical side? At max, the customer might do some quite deviations inside, which is largely going to go unnoticed. Your core technical problems are going to largely disappear, right? From a resaleability of the property, from a valuation of the property, from a maintenance of the property, you actually have softwares today which can actually, look at certain dimensions, certain images, and calculate the area of the property. Imagine building that not just into evaluating the property itself, but also for a commercial place to evaluate what is the area of the office, and therefore how you can convert that to potentially output. If it's, let's say, a trader shop, if it's, let's say, a kirana shop of that kind. So I think property as a collateral cannot be viewed only in the myopic eyes of legal and technical. but also becomes an input for someone who's doing a PD. One of the reasons why you do a PD is to establish the business, right? I think tech has a role to play. Increasingly, you're digitizing your application. Your digitized application can actually pick up images through a set of 4, 5, 6 images. Your digitized application can actually use a certain amount of data to evaluate what is the kind of area and therefore what is the stock you can have. Based on the address, you can actually pick up Google Analytics. You can figure out what is the geography, what is the kind of area. You could then get a sense of what can be the throughput for the shop and so on and so forth. I mean, data is rich, Shashank. I mean, there's a lot of data that's out there available. And I would think that, we need to move away from thinking of property as a collateral backup and make it as a part of data structure to arrive at what is the business MSMEs can possibly be doing. One problem for MSME is the inability to really establish cash flow like in salary. And I think looking at property beyond security into a part of the underwriting process will actually help us get a much better fix on what is the business that this MSME is actually doing. Particularly for your trade, your retail, even services. You could have an image can tell you how many desks and therefore estimate how many employees are working there, frankly. So look at the kind of value you can get which you are collecting today through a PD. That's one side of it. The second side of it is once you have all this data, and you're seeing more and more data getting digitized at the government end also. But I'm saying once you have all this data, you start back mapping that data. You start looking at the data to say when you actually do your quick sale, when you actually do your distress sale, when you actually do your repossession, you could actually build back and start seeing which kind of properties have an issue when the repossession happens. You have some heuristics to say, standalone properties have a proper problem, land have a problem, and so on and so forth. But you can actually start digging down to say certain pin codes do have a greater problem in possibly repossessing. You can actually dig down and say for certain category of properties, if it's a standalone or if it's a flat, do I have a greater difficulty in getting orders for repossession? There's a whole host of things that data can actually tell you, and I think property data has not been explored enough, in my opinion.
Can you explore more on that, Paddy? When you say the property data has not been explored, because you have also this limited set of the data in the digital form, right?
So Shashank, data is huge. Data is huge. Yeah, sorry.
Yeah. Look at. Let's take a simple single property. The single property has a pin code, right?
Yes.
Through your pin code, you can actually go back to the bureau and find out how many people in that particular pin code have defaulted at a bureau level, right? You can go into CERSAI database and, technically speaking, from a data structure point of view, check out how many properties in that pin code have had some kind of a mortgage. Okay. Then you can also go back and history is available. I don't know how it can be collected. Maybe there needs to be some kind of regulatory intervention, but you can actually go back in history and check how many of the properties were sold, resold, and if they were resold, at what price they were resold. All these data structures, take an evolved market like the US, right? Nobody goes there and actually negotiates pricing. The price is actually published. You know the price based on what you have. You're going to get there. And I think it's all about preparing for that kind of data there. A single pin code can give you this. Then your name of a builder, a certain kind of builder will attract a certain premium. So if you take a Bannerghatta road in Bangalore, you'll have a builder like Mantri, you'll have a builder like Prime, you'll have a builder like Purvankara. And you'll have a whole host of localized builders. Now, each of those builders have their own benchmark on pricing. That's the rational logic you can build while doing valuation of the property. Right? How do you value property? You look at the legal technical on one hand to ensure adherence to law, but the valuation of the property is really about the quality of construction, the nature of the maintenance. You have images. What is your approach road? You don't really need anyone to go there physically to check it. Using an image of the property, you can actually today do an estimate of whether it is adhered at least to all the external bylaws. Am I encroaching on common land? Your precise latitude, longitude data that's available for a property today to be able to decide whether you're encroaching or not. What does your technical manager finally do? He or she goes there and checks whether the property is encroached on the road, right? What is encroachment on the road? It's really a latitude, longitude, a geo-coordinate that you're either crossing or not crossing. It is possible for you to take images and make an estimate of it. You won't get it right 100% of the time, but the sheer save that you have will save you. And two, even if you have encroached a bit on the road, for argument's sake, what's the worst that are going to happen? You're going to demolish that wall and go inside, right? The entire property is not at risk because of that. Correct. So some part of this technical, I think, especially when you come to LAP for individuals, collateral for education loans, for home loans, especially second sales, sole proprietor LAP with residential property, I think some part of this technical can actually get into fully data-oriented model.
Absolutely. I think brilliant, great thought, Paddy, and thanks for adding it. Maybe Rajul or Puneet, if you want to add
I'm not
any
sure
pointer
Ismail
to
will
that.
agree though, but
No, I think the right point raised where actually, Shashank, it's not only about property, the everything. Now we are having a so much of a data in hand. Somewhere the learning out of data, intelligent type of assumptions has to be built up around those, whether in terms of your collaterals which are coming or the type of say the area where we are landing. So everything in terms of every dimensions, the data is so huge now, and we are having access to data, whether we run a AIs or MLs on that, or whether we do a right analytics. So analytics on a data plus digital, this will surely be changing the way. And as Padmanabhan has talked about, the pin code wise, the things are available. In fact, in SME also we are using not only on the properties, we are using particular area fundings, which we are looking for locality fundings. We are using those things, and that's helping a lot.
Basically, there
now,
are
if I think of it this way, in a personal loan, sorry, yes,
Yeah.
so go ahead, Mr. Bhargava. Yeah, go ahead.
there are three steps. One piece is collecting a data. So you need to have a physical visit to collect the data. Observing, taking pictures, capturing geolocations. So you collect multiple set of data. The second option is that once you have data, once the data is collected, you need to build algorithm around the data. So algorithm should be based on the policies you are following. Then once you have made the algorithm, then you take decisions based on algorithm. So as of now, the technical manager or the valuer, they take manual decision, and this is prone to multiple errors. But when data is clean, your algorithms are set, and then you need to keep on evolving your algorithm to arrive to a correct set of decision for it. So it's not only the valuation, but the regulation piece as well. So once the data is collected, you have made a right decision. Then the important piece is how you are going to collect money in case of failure of repayment. So there your pin codes, of course, pin code. Then even your time taken for surfacing, depending on the states. So that's a third set of data which needs to be captured and utilized for final decision making. Yeah, please.
Absolutely. Shashank, take a very simple use case. Okay, you have an application which says that address number 1/138, road number 5, Chennai 62, for argument's sake, right? You get an application saying this is a shop. All you require is to actually get into a Google map check and see whether it's actually a shop or it's a house. I mean, to that level, you can actually have data available. Look, somebody like Map My India has virtually mapped every street, every city, every line in this country. Correct? So you can actually get down to using metadata of that type if you really want to. How do you automate that is a different challenge. Today, you'll have to manually go and check. If I get an address, somebody have to manually go and check, type that address in Google and figure out where it is, right? But imagine if you are able to automate some of that, then the moment you type in an address, you should be able to pinpoint, you should be able to figure out what are the number of approach roads you have. You should be able to figure out, how that property is looking from a top, from the side. Your Google 360 map will actually show you all kind of views that you want from an external perspective. And if you zoom in right enough, you can even figure out what is the gap between the compound wall and the starting wall of the house, so to speak, literally speaking, right? If somebody comes and says it's a high-rise building, you can actually zoom in and say whether it's actually a high-rise 20 floors. Someone like a Hiranandani actually publishes their entire master plan upfront. So if you know it's a Hiranandani address, pick up the master plan from the web and you can evaluate the area of the house. A lot of things that your technical manager does actually can be automated by simply picking up the address and zooming in through maps. It's a future. I'm not saying it will happen today. Today, maybe the first step is to get your sales manager or your credit manager to go and take images and automate this calculation. But I think that future will come. It's only a matter of time. I mean, this is an opportunity for someone like a Map My India to actually convert this to a service and put it on the market.
Thanks, Patty. I think so. Now, this is a very interesting going. And since everybody is talking about the role of the tech and all, so now there are lots of the questions coming in the Q&A. I'll pick it up. But before that, I want to bring it, Anil. I think Anil, sorry for bringing you late, but I think you are the one in the group who is driving the tech side of it, right? So, as a tech leader, because you have heard of the business and the credit side of this thought process. So, Anil. I think most of the financial institutions, as a currently, they rely on the vendor-led process for technical or the legal. And I think Paddy and everybody and Rajul is talking about the availability of data and the opportunity for the automation. How do you see that? What are the typical technical challenges and the strategy that technology is adopting to streamline some of this component of the technical and valuation process from the tech perspective?
Yeah. Am I audible now?
Yes, Anil, thank you.
Yes. Okay. Till now, all the speakers spoken about the valuation of the property and their problems, their constraints. Now I have to, being from the implementation side, I have to deal a different problem. I have to solve a different problem altogether. That is how the reports can be seamlessly shared to our credit guys without any manual exchange of documents. So for that, we have different options explored. Um, but like giving a system access to the legal and technical vendor so that he can do the data entry of his report and upload his report. And we can read from that report and through OCR technologies and auto-populate the data to our credit teams for decision making. But how much ever we try to do automate, still a lot of vendors are non-tech savvy guys who are just having very small room at the offices. Some of them may not be having offices at all. They might be working from internet cafes. So here the question comes is data security. See, while basic data, we have to customer data. Basic information, customer name, address, phone number. So this will become PI data, and security of the data will come into picture, and all the regulators will jump in and how we are securing the data. So these are all the constraints we have to solve from a technology point of view. And yeah, some vendors are very good from the technology point of view. They can access the system, they can do the data entry without any problem. But one more issue we have to solve is see how the setup of the technical or legal vendors is there. So they'll have an office, they'll have a manager or the proprietor, and he will have a field agents who are going around the properties and doing the valuation and coming back and submitting the physical report to that particular owner. So how they are going to do the valuation on system or how to automate that piece. So what we thought was maybe we can give a mobility to them and they can directly do the data entry in the mobility itself. Plus later on can be captured immediately of the property videos can be captured, all those things. We try to do automate. These are all like Paddy or Puneet said, we are at very initial level of automation of this piece, which is a more manual driven just before the sanction, which is mandatory step for sanction. So still a lot of journey to be made. All these vendors to come into more technical savvy stage so that we can achieve that minimal tax. Out of entire sanctioning process, this is the piece which takes longer time. What everything else you can do, state process, automated system rules can be done, everything can be done. But unless you get the legal and technical quickly, your sanction will take little bit more tat on it. These are the challenges you have to take. But reading the property documents is one more challenge where not all states are on digital mode. I hear from RBI that some 6 states are ready to do the land records verification through system. See, like example, if you take Telangana, they are using blockchain to automate the property documents and registration processes. So these are all in exploration way, maybe some long way to go for complete automation.
No, thank you, Anil. Thank you. So I'll now try to pick up some of the audience questions that we have already have some set of the questions, but since audience is there and we have lots of the questions, we may not be able to cover all the questions, guys, but definitely we want to cover.
Shashank, I'd like to answer one question. The last question, the last question that has come. I was
it's specifically mapped to you.
I'd like to sort of touch upon the last question on digital lending. In my opinion, the digital lending and outsourcing guidelines really talk about the fact that the underlying premise, the whole spirit and letter of those guidelines is as follows: that the lending institution must be in control and must be responsible for the quality, veracity of the data and the decisioning, right? But the nature of data can still be from outside. For instance, when you consume a bureau score, none of the lending institutions understand what is 700. The 700 is given by the bureau. No institution in the world can explain 700. Ditto, when you consume an address, it's an address that is given by the municipal land records or whatever. None of us can question that. All we are doing here is changing the mechanism of collecting that in whatever we are discussing from being physical to digital, number one. And instead of sending a human being to evaluate, we're using technology to make images, map images, and evaluate it. So in my opinion, none of these are in any violation of the RBI circulars.
Thanks, Paddy. Thanks.
Yeah, sorry, Shashank, I want to add one point. It's
Yes,
not entirely RBI evaluation. It's how your risk team is satisfied. Unless the
That is
vendor
correct.
goes to the property and do the physical verification, some risk managers will not accept it on. So it's up to
Absolutely, that is correct.
it is from human being to person, bank to bank, or organization to organization.
I agree with that. I agree with that. In fact, when scoring first came, it did not immediately get adopted everywhere. I think it took time to adopt. But I agree with that. I think that is a larger bottleneck than data. Absolutely correct. Agree with you.
Yeah. Fine, thanks, guys. So I'll just pick up the another question. Now it's very specific. Varun, you are asking for the used vehicle finance, but I'll just try to widen it for the overall secure lending, especially for the semi-urban and the rural. You're asking that where a lot of sourcing happens through the dealer and DSA in the local market, B2B to see a good business model for the fintech who is just starting in this space. I know either fintech has not played much into the secure lending side, but Rajul sir or Puneet, anybody, you or Paddy, you have a thought that how the fintech can play into the role into that space?
Shashank, it's a pricing problem.
Sorry?
Ultimately, it's a pricing problem.
Okay. That's true.
See, what happens is, see, the fintechs were very successful in a personal loan because there was a huge. But in case of home loans, it is very competitive market. So if you look at ticket sizes, their cost of operations are low if the ticket size is high. If the ticket size is low, cost of operation is high. So, the margins are low. So, I mean, I don't know, how the fintechs will play their role. But of course, some of the fintechs, they bring in some value. Some of them are doing a good job in terms of integrating the employment journey. Some of them are doing good job in terms of assessing the customer like PD, sort of things. And then some of them are doing, some fintechs are doing a good job in digitizing the loan agreement. Some of them are working for valuation piece. Some of them are also working for, digital decision of legal, especially in some states, government of the state government has digitized their documents. Of course, they have not given the API, but then, you can still scroll and then look at sitting at office instead of registrar office, you can do your due diligence. And wherever, your algorithm says, okay, there is a disconnect between legal and technical, or within legal, there is a disconnect. You can always visit the registrar office to cross-check. So yes, there are a lot of digital things which is happening, and then especially the state governments. So I recently heard that in Uttar Pradesh, they have started giving non-encumbrance certificate digitally. If this happens, and they integrate with the API, then probably, the need for visiting registrar office for index 1, index 2 search would be eliminated. And this will, in a way, will, fasten the process of lending.
Understand. I'll pick up the another questions and then come to the discussion. I think this is another very now emerging area where that most of the lenders are also focusing on the affordable housing. So Varun is asking question how the valuation of property can be done in case of affordable housing, wherein we have identification challenges and multiple units are built on the same plot. These cannot be compared with the reputed builder properties. So I'm not sure, is this true? You guys can guide us. So maybe Puneet, you want to pick it up?
Shashank, not a much this thing on this smaller ticket size. Probably maybe the other members would like to have on this.
No, sure.
Okay, I'll take this up. So especially affordable housing finance has three major challenges. One is, the boundary mismatch. Number two is, locating the property. And third thing is, within a plot, limits are, and there is no proper, like in Madhya Pradesh, the Prakoshta declaration is there, or, the proper share of land rights are mentioned on the. So I'll take one by one. First is that, when the four boundaries are not matching or four boundaries are not mentioned properly in the sale deed, there you need to identify that, the kind of deed you are now getting must have, all the four boundaries, current four boundaries. Seller buyer, you need to check whether the seller is actually having a possession of that property or not. So these are the multiple things that you need to do before, getting into a valuation side. So first is that you need to ensure that the property belongs to a seller who is selling the property. The seller is present in the property during your visit. Then the four boundaries, which is captured by your legal, is actually mentioned in the draft sale deed. You have checked it, and the same draft sale deed is getting executed at registrar office. And once you have done this, post subject to certain condition, you can get the valuation done. And of course, you need to take some affidavit, come undertaking with photograph that, property photograph is taken with geolocation, so that, at later point of time, there is no dispute is arises. Number one. Number two is about, within a floor, multiple properties are there. There you need to have first you need to have a plot layout plan, then you need to have a building plan, and third one is your floor plan. And especially in the floor plan, that property should be demarcated and properly marked and signed by seller and buyer both. Once you got this document, then you can do a technical valuation and get this thing done. But then these activities could only be done with the trusted builder, not with everyone. Where so there has to be a builder scoring model for those cases. Builder is being scored that he doesn't have a tainted records. So all such things should be checked before getting into any transaction for such cases. I hope I'm able to answer it.
I think thanks, Varun. Thanks, Raju sir. So I think I'm just going to the last big part of this wide topic to continue the discussion. But I think one of the challenges that when we discuss with most of the lenders, one is that in the whole of the technical and legal process, there is also lots of the fraudulent aspects attached to it. The challenge of the fraud properties or some kind of a dispute around the property. And banks have, lenders have typically added that risk RCU kind of the process in the whole of the things. So what are the typical challenges that you guys see that in this whole the fraudulent practice? Maybe Puneet, if you want to talk about it.
So Shashank, basically, if you see what is the risk the banks run, and what are the scenarios under which the fraud can happen, right? So one is, say, the borrower himself is a fraud, right? Which is broadly I'm categorizing into. There can be the other reasons or other parameters can also be. Broadly, I'm telling one is as a banker or as a financial institution, which we say. One is a borrower himself can be a fraudulent. The second can be the borrower as such is fine, but the property sometimes comes. He himself doesn't know how the builder has transferred that property or something. That some fraudulent angle is there to that property itself, right? And for a bank always run a risk for that. The third is which is a partial fraud. We can't say it a fraud, but that can be like connivance with the valuers or something in terms of increasing the value, and the bank actually funding a more on a required property. That's a partial this thing. Though the borrower is probably up till that time is fine, his cash flows are okay, everything, and you can take a call. But on a property front, something in wake of having a more funding, this thing can happen. The most important thing which is there is your onboarding. So the fraud itself as a process, if I see, if my onboarding process, whether we talk about the KYCs, whether we talk about the due processes, and of course the underwriting this thing, if that is rightly being done and the rightly all the red flags have been captured at that stage itself, I think 60-70% of your fraudulent thing is out of that this one. Then the second part comes to your processes, which has to be very, very strong in terms of doing valuations, And in fact, in that process, I will have a second step, which I say the vendor evaluation process has to be very strong, right? The vendor, there's a process where vendor will do this and you will define the process. But before that, the right vendors, whether the valuer, whether the legal vendors has to be rightly picked up. So your vendor evaluation has to be very, very strong and right, so that you are picking up a right people, right? And the third, of course, your vendor, the guidelines for the vendors. And you, as a banker, what we do, we look for a multiple valuations. Of course, that comes with a cost. But the alternative is can be you can have a desktop valuation, can have the internal team to have a right maker checker. So these are things which can actually, in fact, reduce your overall fraudulent this thing. And now, since more and more data, again coming to data and the digitization journey, in fact, you have a right APIs on with the government APIs or the other APIs. That really is going to help you. So using those along with the right, say, algorithm build up around your processing or your sanction processes. And finally, of course, picking up the properties for the mortgages and thing, that will there. But always a risk is there. But you have to put a right process, and it starts from your underwriting itself and onboarding.
Thanks, Puneet. I think we are coming to the what's the end end of the time, but I think it was amazing, engaging discussions. At least I have learned a lot. But anybody, if you want to share that last bit of thought, happy to hear it out. Be it Rajul, Anil, Puneet. I think Paddy has just dropped out. He has something. Raju sir, you're on mute.
Yeah,
Yeah, Anil
this
sir.
Anil, one point I want to add is one more constraint for automating this process is the number of documents is always variable. It's dynamic. So each legal guy will ask a different set of documents, and of course, to reduce the fraud angle of it, maybe more documents might be added. So too much of to and fro is also the process is not constant across the board. So this is one more concern for automated process. So that's why I'm saying this piece can be automated, but may not be 100%. Still, some part of manual thing must be there. And the rightly pointed out by earlier one, the risk assessment of the vendor is very crucial because this is a huge risk where frauds can happen, especially if you take gold loan. Jewel value is the place where a lot of frauds have happened. Same way it happens in the property valuation also. So these are the points every lender should take care, especially regulated entities are really closely monitored by RBI, how you are doing the decision making, how you are valuing, and how you are managing the collateral. And equally important is how you are doing your SERSA registration and this dedupe of the property so that same property cannot be mortgaged for multiple vendors. So these are the different risks every organization took care of it, and IT is always collaborative unit to help the underwriting.
No, thank you, Anil. I think we've come to an end. I think in context of the time, thank you everyone. Thank you, Rajat sir. Thank you, Puneet.
Prashant, just want to add one thought which is
Please,
there.
please.
Just permit me for a minute. So it's very, very important. Still, lots of things are happening. If we talk about the regulatory perspective, we talk about the, say, legal on the government and this thing. Things are still in the silos where, of course, as a finisher, we always look for the things together has to be taken care, whether we talk about digitization of records or whether we are looking for a digital journey end to end. There, I think all the people, regulatory and everyone has to come together. In fact, the financial institutions also need to come together. That's where actually the journey will be better.
No, thank you. Thank you.
Before we get into any, this thing conclusion, the important piece is that you collect right set of data. Second is, you build the right kind of algorithm rules, related to regulation. Third is that, you need to identify clusters where you can go wrong. This could be multiple, instances where you can go wrong. So then you need to identify those clusters, and then you have to build an ecosystem where, your legal, technical is speaking to each other, your your visits done by your credit or business or valuation, they are speaking to each other, and then, Instead of asking multiple documents from the customer, it is important that you marry all those data you have collected and identify the patterns which may lead to fraud, patterns which may lead to a right decision. And then, based on those patterns, you need to take decision. That's it from my side.
Thank you, Raju sir. Well summarization and well clear thoughts. So I am sure the audience would have picked up on a very valuable insights from the discussion. So thank you again once to all. And now continue the discussions. I will hand over to Vikrant for the next part of the discussions.
Thanks, Shashank. Thank you.
Thank you.
Thank you. Bye-bye.
Thank you, Shashank. Thank you all. Bye.
Thank you. Thank you, Shashank, and thank you all the panelists, Rajul sir, Puneet, Ashok, as well as Paddy. Thank you for joining us and giving
Thank
us, yeah.
Thank